An envelope from the IRS is sitting in your mailbox and your heart is already pounding. If it's a CP2000, and odds are it is, because it's one of the most common letters they send, here's what you need to know right now. It is not an audit, it is not a bill, and the proposed amount is frequently wrong. Here's exactly what it means and how to answer it. Let's break it down. What a CP2000 actually is: a mismatch report. The IRS computer compared your tax return against all the W-2s and 1099s it received about you, found a difference, and generated this letter automatically. A machine wrote it, no human decided you did something wrong. It says, here's income we think you didn't report, and here's the extra tax we propose. Proposal is the key word. Let's kill the two fears first. 1. A CP2000 is not an audit. Nobody is coming to your house. Nobody is combing through your whole return. It's about the specific items listed, nothing more. 2. It's not a final bill. It's a proposed change that you're invited to agree or disagree with. You have a real say, but only if you respond. Where does the mismatch come from? Usually one of these: a 1099 you forgot, a side gig, a brokerage account, savings interest, a form that arrived after you filed, income that belongs to someone else under your social security number, a duplicate form, or, very common, income you did report, just on a different line than the computer expected. That last one matters. The letter can be triggered even when you did nothing wrong. And this is the kind of form that starts it all, the 1099 NEC, straight from the IRS. When a client files this reporting $4,000 paid to you, the computer expects to find $4,000 on your return. If it can't, the CP2000 machinery starts turning. Every 1099 is one side of a match the computer insists on completing. Here's the most expensive misunderstanding about the CP2000. The proposed tax is calculated in the worst possible way for you. The computer adds the missing income as pure profit. It doesn't know about your expenses. A forgotten gig 1099 for $4,000 gets taxed as $4,000 of pure gain, when your real net after mileage and costs might be $2,500. The proposal is a starting point, not the truth. So here's your playbook. Step 1. Read it slowly. The letter shows exactly which form, which payer, and which amount didn't match. Step 2. Pull out your return and your records and check, is this income actually missing, or is it there under another line? Step 3. Decide which of 3 answers is yours: fully agree, partly agree, or disagree. There's a response form right in the letter for exactly this. If they're right and you agree, sign the response and arrange payment. A payment plan is available if you can't pay at once. Done. It ends there. If they're partly right, the income is real but the tax is inflated, respond with the correction. Here's the income and here are the expenses against it, with documentation. If they're wrong, the form was duplicated, not yours, or already reported, say so with proof. All 3 paths work. Silence is the only one that doesn't. Now the deadline, because it has teeth. You generally have 30 days from the letter date to respond, 60 if you're outside the country. Miss it, and the IRS finalizes the proposed amount with a notice of deficiency, and your options narrow fast. The single worst move with a CP2000 is the drawer. Ignoring it converts a negotiable proposal into a real bill with penalties and interest attached. Let's see the money difference. Example: a CP2000 proposes $1,200 on a forgotten $4,000 gig 1099. Respond with your Schedule C math, $1,500 in mileage and expenses against it, and the real added tax comes to about $700. Pay without looking costs $1,200. Respond with records costs $700. 20 minutes of paperwork saved $500. 3 more things worth knowing. Interest keeps running on whatever you genuinely owe, so faster responses cost less. If the extra tax came from an honest mistake, you can ask for penalty relief. First-time abatement exists and works. And if the numbers are big or confusing, this is exactly the kind of letter a tax pro handles routinely. The fee is often smaller than the error you'd miss. And to never see one again, Report every form, even ones that arrive late or seem tiny. Check your IRS wage and income transcript before filing if you have lots of 1099s. It lists exactly what they've received about you. Match it, and the computer has nothing to flag. The CP2000 is entirely preventable with one habit. Your return matches their records. Quick recap. A CP2000 is a computer-made mismatch proposal, not an audit, not a bill. It's often inflated because it ignores your expenses and sometimes flat out wrong. Read it, verify it, and answer within 30 days. Agree, correct, or dispute with documents. Respond fast, never ignore it, and next year, match your return to their records so it never comes back. One quick note on who makes this. The tax breakdown is prepared by a tax accountant with over 15 years of public accounting experience, so every figure here is checked against the IRS sources. It's always educational, never advice for your specific situation. Bottom line, a CP2000 is a conversation the IRS started, and you get the next word. Take it. Verify their math, subtract your real expenses, respond inside the window, and the scary letter usually shrinks to a manageable number or disappears. This is general education, not tax advice, so check with a pro about your situation. Subscribe to the Tax Breakdown for simple tax-saving tips before you file.